As promised, let's focus on Escorts. He reported a very good set of numbers. The core EBITDA more than doubled, and the company's core tractor business reported a strong set of earnings. To discuss more, we have with us Mr. Madan, the Group Financial Controller of Escorts, who joins us. Hi, Mr. Madan. Thanks so much, sir, for joining in. Are you satisfied with this quarterly performance?
Yeah, I think results were good. So I think across all sectors we had done better. So except for the railway, where the margins came under slight pressure because of the inflation and the commodity prices, which we are not able to pass on because of fixed price contracts. Otherwise, overall, we are pretty happy with the performance.
Okay. Should we bet on the tractors to do well even in the coming 1 or 2 years? What would be the key growth drivers for the company according to you?
I think you look at from the perspective of the sectors in which we are operating, both I think on the construction equipment, railways, as well as on the agriculture side. I think all three sectors are the sectors where the government is giving a lot of growth impetus to these sectors, and you see a lot of initiatives being announced in the budget recently, which are spanning across all these sectors. So I think Escorts today stands in a very sweet spot, where we are present across all the sectors where the government push is also there. So we expect the growth trajectory should continue at least for next 2-3 years.
Well, Mr. Madan, you also plan to expand in other markets apart from only northern markets, where you have around 18 to around 20% market share?
Yeah, so we have been there present in the southern and western market, but the market share has not been very strong there. So like you said, so northern central India is a major market for us. But in the south and west, we have been planning to expand it. So there are certain product gaps were there in the portfolio, which we are now bridged. So we already launched those products now into the market. We're expanding our channel in these areas. So yes, going forward, a lot of focus will be there in these markets, and we expect the market share to improve with our improved presence in these segments.
Okay. Q3, your volume growth in the tractors business was very strong, close to about a 25% growth. Is this kind of a run rate sustainable? What is the volume growth that you expect in FY18 for the tractors business?
See, we expect at least for the next 6 months there's a visibility. So I think Q4 of this year as well as Q1, we expect the double-digit growth in the tractor industry will continue. And after that, I think a lot will depend on what are the prediction on the monsoon side. If the monsoon really happens to be good, you may actually see a good demand coming in on the tractor industry next year as well. And you can actually see the industry peaking and reaching its new peak in FY18. But if the monsoon really becomes fairly slow or it's deficit, then probably you'll see a slowdown happening in H1. So, but I think we still expect it will be somewhere around 8% growth is still feasible next year.
Well, Mr. Madan, you have been exploring various opportunities in the export markets as well. What kind of targets do you have in terms of the export markets?
No, as of now, the exports are very small portfolio in our overall top line. So I think this year we expect to do only 1,000 odd tractors. So the focus, I think, is now in terms of developing the entire portfolio for the export markets. We really look at the product side. The export market potential is really in the higher HP segment and or in the very low HP segments up to 30 HP, the special compact tractors. So for the domestic market in India, the more focus is actually on 30 to 50 HP segment, which is 85% of the market. So we are still in the process of developing our portfolio for the export market, and we expect by mid of next year, we'll have a complete range of tractors available from 12 HP to 120 HP, which we can actually play in the export market. So our vision is in the next 4 to 5 years, we should be able to touch a volume of 8 to 10,000 tractors in exports from the current level of about 1,000 plus tractors.
Okay. So while the construction equipment, segment is done quite well on the top line, when should we expect a break even at the operating level for the company?
So in fact, we have been giving guidance to the investors in the past also that H2 was supposed to be a break-even period for the construction equipment business. So actually the results would have been even better if the inflation and commodities price have not set in Q3 itself, which actually led to some slowdown happening there. So the margins actually came under pressure on construction side. But in spite of that, we were able to actually reach a level which the margins improved by roughly 240 basis points compared to the sequential quarter in September. So we are still hopeful. I think Q4, if the inflation doesn't really play a spoil sport, we should be able to reach a break-even level in Q4 in construction. And going forward next year, probably maintain a positive EBIT margins in that business also.
Well, sir, tractors is a rather stable vertical. You have around 900, 1,000 crores every quarter. How big is the construction or maybe the railway segment as well?
I think tractor going forward will still remain the largest business for us. So today tractor constitutes about 80% of the top line, and going forward, and with the kind of growth we are seeing happening in the construction and railway, tractor will still remain the largest segment. The overall percentage may come down to maybe from 80%, it may come down to 65, 70 odd %. But I think it will still remain a significant play as far as the company is concerned.
Any plans to demerge any vertical?
No, not as of now. So we don't have any plan as of now to really we'll be continuing to focus on all three segments. So auto was one which we already divested last quarter. So now I think these segments, three segments are the one we're going to focus on going forward. So as of now, there's no such plan.
Well, Mr. Madan, then final question from my end then. Could you give us some clarity in terms of your order book as well as growth in various verticals?
So orders, I think you look at it from the railway perspective, we have got a strong order book today. We have about 130 crores of order book as of end of December, which is the highest ever I think we ever had in this business, which we plan to execute in the next 6 months' time. And there again, we see the momentum of growth will continue. So we still expect 15-20% growth will happen on the railway side continuously for next 2-3 years. And there, the existing portfolio, what we have in the pipeline, we think we can actually take this turnover to a level of 400-500 crores easily in next 3 years' time frame.
And finally, sir, any fundraising planned by the company in the future?
No, as of now, there is no plan. So unless there is something really interesting opportunity comes into place, we'll probably explore at that time. But as of now, there is no plan for debt or capital expansion in the company.
All right, Mr. Madan, thanks so much, sir, for joining in and, in fact, giving us all those details. All the best for the remainder of this fiscal as well as FY18. Well.